Right then, so let's explore how Ethiopia's economic reforms have played out since the flotation of the bill last July, with someone in the finance and investment and advisory space over there. Merid Fikri Yohannes is the founder and CEO of Pragma Capital, is joining us now live from Addis Ababa. Merid, good to have you on the program. So let's start with a broad picture here, right? We're now 10 months into the new FX regime. Since the 10th of August, the dollar bear rate has moved from around 104 to 132 today. Does the birr still have further to weaken as these economic reforms take root, or has it, found its equilibrium point?
Pleasure to be on the show, Rama. As always, thank you. And apologies that you knocked me off out of my Friday evening, so I'm wearing my red sweater. So yes, it has been almost 10 months. So if you see the overall implementation of the macroeconomic reform is from two perspectives. From a macro perspective, I think the balance of payment, the numbers are solid, right? In terms of export, if you see the past 9 months export performance number, it has garnered around up to close to $6 billion. Now we're just left with 2 months to finalize the fiscal year. So the export number is expected to reach up to $6 billion. Service is up by 30%. Remittance is up by 21%. And especially the reserve of the central bank has gone up by 200%. So in terms of, if you see the balance sheet of the banks in terms of forex asset, it has gone up to 48%. So from overall balance of payment perspective, the numbers is solid. Like just to pick up one of the few things is, coffee has garnered in the past 9 months $1.5 billion. Mind you, this $1.5 billion used to be an annual number before we floated the currency. Gold has reached $2.1 billion in the past 9 months, Rama. Mind you, if you see the balance of payment last fiscal year, gold has not reached even $500 million in terms of exports. So what this clearly shows you is that in terms of Ethiopia was losing more than $4 billion of trade through illegal trading, contrabands, and all those activities. Because now that we've corrected the forex, now all those unofficial activities is being captured to the official balance of payment. So,
right.
So in terms of from a balance of payment perspective, we're capturing the numbers. Macro numbers are solid. However, if you see it from a macro perspective, in terms of cost of living is very challenging. I think there are a certain number of reforms that I think in our assessment the government should address in terms of tax overhaul, personal income tax, all this. I think this is something we need to do. So, but if you see from a number perspective, the macro numbers is solid.
Right, and actually on that cost of living story, let's just give our viewers a bit of context as to the inflation print that we're looking at the moment. The headline number was 14.4% in the month of April. It went up a little bit, around 80 basis points, give or take, compared to the print that we saw in March. Food inflation, 12.2%, non-food inflation around 17.9%. When the Monetary Policy Committee meeting takes place at the end of June, where do you reckon they're going to be? Do you think they'll keep rates unchanged as they keep, an eye out on how these policy changes are still working out?
Yes. So I think in our view, the policy rate of 15%, the national bank rate, I think is going to maintain. I think that's it's going to maintain. Yes, for inflation has gone up to 14%. Mind you, we just passed through the Easter holiday, so it was expected that things, especially food inflation, to be to go up. So in the next coming Monetary Policy Committee committee, I think the policy rate is going to be maintained. However, I think the more discussion is towards in terms of removing the credit cap coming September, right? The central bank, prior implementing all these macroeconomical reforms, it has put the economy, especially the banking sector, putting a credit cap of initially 14% and now up to 18%. So it is expected to be removed by the coming September.
So just clarify that for our viewers. When we're talking about the credit cap, are we talking about a cap on the headline rate that the banks can lend to, or are we talking about a cap on private sector credit growth?
So the credit, in terms of we're talking about the bank in terms of in terms of the lending, the aggregate lending of the previous year books in terms of into the economy every fiscal year. So if a bank lent 100 billion birr, so the last fiscal year it could only go up to 18%. So they put a cap on that, not just only across the private banks, including the state-owned banks as well. So this is just has been implemented generally in the entire economy to appease the credit growth that goes to the general economy, so that to appease the inflation, and then more importantly to also implement the macroeconomic reform, especially with the forex reform. So that is expected to be removed this coming September. And more importantly, I think the Monetary Policy Committee is closely watching the development of the interbank money market, the removal, making sure that the Ethiopian economy has reached a truly positive real interest rate regime, because that is very much important, because we're expecting by coming September, Ethiopia is fully implementing a market-based monetary policy where the central bank, for the first time, I can say that, would have a lever in the economy to regulate the credit growth of the entire economy using the policy rate. So we're still in transition. I think the coming June meeting and also the coming September meeting, I think the team is closely watching the implementation of the new monetary policy and then also the bank credit growth as well.
But one last question for you, and this is a bit more broad, because as someone who works within the Ethiopian economy, the financial system, what's your assessment of foreign investors' appetite to come into the Ethiopian market to, if not buy assets in the country, perhaps get into Ethiopian debt?
Yes. So from a foreign direct investment perspective, there's a number of backdoor conversation happening. Even from our firm side, as Ethiopia opening up its banking sector for the second time, the foreign banks, both from Nigeria, Kenya, they are interested. In fact, Rama, last week, the central bank hosted the first Ethiopian Finance Forum. On that forum, the KCB Group CEO announced that they're going to come to Ethiopia through acquisition of up to 40% if the law when the law is fully implemented, in order to come in and acquire a local bank. So it clearly shows you that the interest is strongly there. At the same time, the foreign investors, they're watching the debt negotiation, which happened the coming August. The third review of the IMF is expected to be passed by the executive board this summer. So they're watching every market development very closely. I can assure you one thing is that all this macroeconomic reform, especially the overvalued currency regime, the market not being accommodative, now that has been availed, that is being removed. So all these reforms is considerably inviting foreign investors in terms of from interest perspective. So everybody's watching the development very closely. I think the 2025 is a very fundamental year for the Ethiopian economy, especially for the financial sector. I can assure you, like the central bank governor at the forum gave that by the coming December 2025, Ethiopia is going to be ready in terms of building out all the legal infrastructure to welcome the foreign banks. So the coming 2026, he assured the market that they will start to receive the foreign banks. So the conversation is happening, negotiation is happening, and at the same time, I think in our view, at the same time, people are wisely watching the market very closely, and which is very good.